Hi everybody, it is the weekend heading into February, week 1, 2020, and this video, much shorter than the first video, but it just is a protective video in case we have an update coming our way on Monday and explaining and keeping you calm through the steps of that, because most of us are already set up in puts, and those of us that are not set up in puts yet, this will give you a great opportunity to get into some. We know based on what we watched happen last week, we watched our inability to climb back above last Friday's close at 32.95. Our high on the week last week was 32.93. So until we get up above last week's high and close above 32.95, we should be selling all rallies. Okay? Very simple. Until you see a close above 32.95, you should not be hanging on to calls for very long. But Monday we might get a counter trend rally just because everybody is extremely bared up. We had a very hard move to the downside on Friday, and the market loves to turn everybody on their ear and do exactly the opposite of what everybody expects. What if China opens up on Sunday night, and then the Bank of China unloads a ton of stimulus, on the market, and the market does not go down as much as everyone expected? And what if we get into the caucus on Monday and it seems more like Buttigieg is going to win, or Klobuchar is going to win, or Biden's going to win? Then that whole Sanders is going to win the Iowa caucus and the market's going to sell off theory is going to all go to hell. So what if all that happens? Let's be prepared for the upside. And like I said, until you see above 32.95, you should just put your hands and using these rallies to buy puts. We're going to be poised for a 10-20 SMA bear cross on Monday. And a lot of times the market knows this is coming, so they will artificially produce a rally to fend this off. That could be another motivation for getting us to rally off the open on Monday. If we don't rally right off the open, another scenario is that we gap down small, somewhere above Friday's low, but beneath Friday's close of 32.25, but above Friday's low of 32.14, and we just test down a little bit below Friday's low and test the 50-day simple moving average. We have a small gap as well just below Friday's low. Maybe that just fills in and we reverse above the gap fill. And we still have a little measured move here that we could trade all the way down to at 32.03 and change. This was the second of two measured moves that I gave you on Friday. This one would take the range from our high, our open on Friday, to the break of the previous day's low, and double that move down would get us to 32.03. We could trade down here and then reverse hard and come back. And once we trade back above 32.25 where we closed on Friday, we get into a gauntlet full of levels that have to do with where we closed in 2019 and where we opened in 2020 until we get back to our halfway back on the day from Friday at 32.48.51. If we can move above the halfway back of Friday's range, then we go up against 32.57, which was where we were finding our first level of support on the day on Friday. And above that, we just start climbing further into the upper half of Friday's range, moving towards the 10 and 20-day simple moving averages, and moving towards the 2020 and January halfway back at 32.76.21. So this is going to be quite a gauntlet of things that we would have to get through up here around 32.75 to 32.76. You'll have your 10 and 20-day simple moving averages nested together right here. If not the 10-day crossing down through the 20-day, the halfway back on the month of January and the year 2020 so far, unless of course we've made a lower low at this point, then the 2020 halfway back is going to change. But this will still be a very important level because it will be the halfway back for the range of January where we saw our all-time high. This will be a very tough gauntlet to get through as it is. Okay, I don't think that there will be a move above this next week. Not until after we've tested much lower. Okay, so up here would be your ultimate spot to get back into some puts. Up here you can get into the 32.25s, you can even get into the 32.50s, because between decay and this vast move up, the prices will come way down. And if you are lucky enough to get into a 32.50 put, that's going to get you quite a bit of money to the downside if we make it all the way to our target by Tuesday or Wednesday, which is our time window for doing it. Okay? So anyway, I hope that this video helped you out. I thought one more thing before I go. This is the 5-minute chart. I take a 5-minute chart and I plot my important daily levels on it. And you can see that as we came down here and we made our first low and we bounced back on Friday to about the 32.47s. Later on in the day, that area right around there wound up becoming our halfway back on the day, because from that bounce point, we took it and we doubled the range down on the day nearly. Okay, so that's going to be a pretty important level. I think we've already seen that price has tried to manage to move back above it and then sold off and made money specifically from that level by doubling down. So that's going to be our first big important level of the day. And if we can get above that on Monday, I think we could get ourselves all the way possibly to 32.76. So your first opportunity to buy puts is going to be here. You're probably going to be able to stick with the 32.25s here and get in on a decent price. But if we move all the way up here to 32.76, lower high, and fail, that's going to be a great opportunity to get into maybe even some 32.50 puts. Okay, that's it. Have a great rest of your weekend. Enjoy the game. And as always, good luck and good trading.